RSI is one of the most popular indicator in trading, and it's one of the most understood one also. So today, I'll show you why RSI works and why it suddenly doesn't for most traders. Welcome back. Here I have S&P 500 daily chart, and I'm gonna go to the indicator, and then I'm gonna type RSI, and you're gonna find out relative strength index. RSI stands for relative strength index. Just click on that, and you're gonna have the indicator open at bottom of your chart. RSI stands for relative strength index, so it gives you momentum, and but it doesn't tell you about the price movement. So RSI always gonna tell you how strong was the movement on that side, uptrend or downtrend, but it doesn't tell you where the price will go. One of the biggest mistake traders do is selling just because seeing the RSI value above 70. Above 70 doesn't mean it's gonna be just gonna go down right away. Sometimes the RSI can stay above 70 for a long time. So selling at 70 may not be you are smart every time. Sometimes it may be you are early enough. So let's go ahead and see into the S&P 500 daily chart how the S&P can sometime just be at above 70 for a longer time. So if let's look at right here, you are in a uptrend here for a long time. Like here the market was uptrend for quite some time, and right here at this point, let me show you with the circle. So with this diagram, so right here it does the RSI 70. So if you see here, you say, okay, I'm gonna sell it, but for a long couple of days here it stayed still RSI above 70, even though price was just moving flat. So RSI up doesn't always mean price is just gonna go fall down right here. So it's gonna take some time, even though RSI above 70 is there. So you may be early, but you may not be smart on that case. If we go a little bit back on time and then try to find other location that we have a similar situation, is let's go ahead and do that. So if we try on this thing, let's say right here at this point, it's in a daily chart though, I'm just going to tell you. So you had uptrend for some time going all the way up to that certain point in the market, and then you felt like, okay, RSI is 70 at this point. So that if I just mark up RSI 70 here, so which is gonna give you the price movement on that exactly location over here. So if you felt like, okay, this price 520 to 521 is top and it's gonna go down, so no, it's gonna keep going for up for some time, and RSI can stay 70 for some time, and you may just get lost by selling early here. Second reason is normally just by seeing below 30 is oversold location. That doesn't happen every time. So let me show you in the S&P 500. I'm on April 2025 when there was a huge fall in market. So if we see here at this day, April 3rd, the market was below 30 on RSI. We can see on this point RSI was 30, but if you felt like, okay, this is the point now we need to buy, it's going below 30, you were a little early on that case because that day was right here, and then market went still below. So market stayed below 13 RSI since 3rd of April to almost like 7th 8th of April. So almost for a week it stayed below RSI 30. Important failure that happens with RSI is RSI just without any structure. So RSI doesn't know where the price is going, where price is moving. RSI doesn't know where the resistance is and where the support is. It just show you how strength that movement is, but it doesn't know where the direction is. So right here, let's say, and it doesn't know the higher time frame. So let's say right here, you saw that point is overbought, right? So right here on the 19th 18th 19th September, you saw that point is overbought and you're gonna sell it. So you felt like, okay, now it may go down all the way to 30 RSI or so into the overbought oversold location, but that did not happen because RSI did not know that right here is a support point to go back up again, just with the retesting that level and then going back up and up to the like all-time high basically that happened here. So it need to be very careful while you are using RSI. Always need to look into where the support are, where the resistance is, how the longer time frame is behaving, and then in coordination with, if you use that one with the RSI into altogether, yes, you're gonna trade in a better way. Smart market movers use RSI. RSI they always use with the trend line. So RSI generally stays above 40 to 50 in uptrend. So if you look into the uptrend that is started from like this April of 2025, if we just select on this point and then the uptrend all started here, if you just go and zoom in into RSI, so 40 to 50 range is right here. So the 40, if I draw 40 lines, so that happened from this exact same point. The RSI went a little bit up, oversold. People may have thought like, okay, it's oversold location, but however, the market stayed above 40 to 50 in all the uptrend movement into the market. So similarly, that happened with the downtrend also. If we look into downtrend, let me just remove this thing and restart the drawing there. There was a movement downtrend on before April here in 2025. If you see there, the market RSI stayed below 40 to 50 number here, and below this is 50 line. So the market was downtrend unless it found a support there. So the RSI was staying below 40 to 50. It went up to 50, but it came down back again. So it's just gonna tell you how strong the movement was. So the strong movement was right there for the downtrend. It tried to go back up, but above it could not cross 50, so it came back down again unless it found the support at that point. Most effective method that the smart market movers use is RSI divergence. RSI divergence normally means the price is moving up. So let me show you right here. The price is moving up and up and up, and your RSI is moving down into like lower low frame. So that's the called the divergence right here. So the market movers normally buy in that case because there's a huge chance of reversal in RSI that can happen. So let me show you the situation that happened here, right here into the market. So let's see right here. What happened is, you can see here RSI was going down with lower low and lower low over here, lower low and lower high, but market was going higher high and higher lows, higher low and higher lows. So this is basically called divergence. In that case, you always need to look into the market path or the price movement rather than just seeing, okay, price is on higher overbought location and let's just sell it here. You may be a little early on selling it, but you are not smart because price still went up a lot after when you sell it at that point. One thing that you should use and the smart market movers uses is the trend line and the RSI getting support at 40 to 50 zone for your uptrend movement. So if you see like right here, we're at that location on July 28, 29 until 2025, you saw our bought location at this point right here, and you may have felt, okay, this is overbought location and let's sell the market, but it came back down and got support at 40-50 zone and it went up again. It came back down, it got support at 40-50 zone again, it went up, it came back down again and it got support at 40 to 50 zone, so it went up again. So that means like the market was an uptrend for a long time, even though the RSI was moving up and down, but it got support at 40 to 50 zone. So it's always very careful. RSI should be taken just as timing, but not as a direction of the market, just to judge the momentum, like strength on the momentum, but not on the exact price movement. RSI is not broken. RSI has been one of the most popular indicator ever, and I think it will remain for forever also one of the most popular indicator. When you use RSI alone, it may not work, but when you use it with the confirmation, it's gonna work, and it has been working for most of the traders. So always use in coordination with other indicator and always wait for the confirmation, and your RSI will work and you will do better in your trading.